Neil, as always, thank you so much for coming on. If you look at your latest report coupled with what the markets are doing, what do you think OPEC Plus should be doing?
Well, OPEC has a deal in place that it agreed in December, and the deal runs through to the middle of the year. And there's a meeting this weekend to look at progress on the deal, and they'll look at numbers quite similar to ours, which shows that the compliance by the OPEC countries with the deal is about 94%, so that's going quite well. And then the non-OPEC producers are coming in a little bit lower, but their compliance rate is increasing also. So I think they'll look at the market. They'll think that their cuts have been reasonably successful so far. They've stabilized oil prices, which had fallen to $50 a barrel before the end of the year, now in the mid-60s for Brent. And from the point of view of the producers, they'll probably think that that's a fairly satisfactory situation.
Neil, what are you think we're going to actually hear from them when they meet in Baku, Azerbaijan?
Well, I think, as I say, they'll review the market. They'll think that the cuts are working quite well. Don't forget, we're only in mid-March. The deal didn't start until the beginning of January, and the deal has been working gradually. And I would think that they will review their deal. They'll think that it's still got time to run, and they'll note progress, and they'll get ready for the next meeting. Obviously, it's up to them what they finally do, but I think it would be quite surprising if they were to make a major change to their strategy at the moment.
Neil, you guys provide a huge public service. I mean, really trying to guesstimate supply and demand. Is there a real way to understand or forecast forward to demand? Is there really a way to get a handle on where demand's going, or do you just have to wait till you see the data?
Well, obviously, there's an element of both in that. What we're seeing at the IEA is that demand growth in 2018 was pretty strong at 1.3 million barrels a day. And as we backfill 2018 with real data, we're seeing that that number is roughly the case. Now, as we try and understand what's happening in 2019, what we see is that so far in 2019, average prices are lower than they were in 2018. And some of the pressures on developing countries, which were hit during last year by very high crude prices and also currency weakness against the US dollar, those pressures have eased on the developing countries. So we think that their demand growth is going to be reasonably strong in 2019. So that's our view on demand. We think it was solid last year. It's going to remain solid in 2019, which isn't to say, of course, that we're not keeping an eye on the economic headwinds, the trade disputes, slowdown in China, and various other economic worries that people have. So, it's the balance between art and science in forecasting demand is always a debate you can have, but we're pretty comfortable with the outlook that we have.